Improved gross margins and lowered operating expenses were the catalysts to Amazon beating first quarter earnings expectations. Amazon earned 98 cents per share, where FactSet was looking for 84 cents. While Q1 2024 revenue was 143 billion, up on a year-over-year basis by 12.5%, it did include leap year, giving them one extra day of sales. Revenue was down from the Christmas quarter by 15.7%. Gross margins were an impressive 49.3%. That was up 8% quarter over quarter and 5.5% year over year. These were the highest margins posted in a very long time. Operating profit was also better to 15.3 billion, improved quarter over quarter by 16% and year over year by 220%, equating to 11% of revenue. The bottom line was 10.4 billion, slightly lower quarter over quarter by 2%, but jumping 229% year over year or 7% of revenue. Good results. If you're interested to watch our full year 2023 report on Amazon, I will post the link below. Looking at the quarterly data back to Q1 2022, we can see revenue has been growing at a 2.3% compound quarterly growth rate. Gross profits have also been growing by 4%, and operating profits an impressive 17.2% in the last 9 quarters. The net income growth is skewed due to the fact that Q1 and Q2 2022 reported negative income, but if we remove those 2 quarters and only consider the last 7 quarters, net income growth has been 15.4%, driven not only by AWS and advertising, but also third-party reseller and subscription revenue. Looking at the revenue by segment, North America is the dominant market for Amazon. Growth rate has been 2.5% in the last 9 quarters, reporting 86.3 billion in Q1 2024. The international business has been a bit softer, only growing by 1.2% to finish at 32 billion. The AWS business has been growing the most, expanding by 3.5%, posting 25 billion in this last earnings report. The headlines are giving all the credit to Amazon's results, primarily from AWS and the AI boom and their advertising business, but we can see here that third-party revenue and subscription revenue have been growing at a similar rate, all at around 3.5% in the last 9 quarters. It's worth noting that subscription, third-party advertising, and AWS made up 52% of total revenue in Q1 2022 to 57.5% in Q1 2024. Clearly, Amazon's online business is taking a back seat to its other business segments as it moves away from traditional retailing. That being said, their online business reported 54.7 billion this quarter, growing just shy of 1% on a 9-quarter basis. The third-party reseller business, as the second largest segment, posted 35 billion. AWS earned 25 billion this quarter, with advertising and subscriptions coming in 11.8 billion and 10.7 billion respectively. Let's look at some ratios. Shares outstanding grew in the last quarter by 60 million shares, or about 0.5% of the total float on a fully diluted basis. Earnings per share was 98 cents, as we mentioned earlier. Sales per share were $13.40, down 16% from last quarter, but up 9% year over year. Cash per share came in at $6.83, slightly lower on the quarter, but up 31% year over year. Book value improved to $20.30, both on the quarter and year-over-year basis. Amazon's PE is 45.78. We annualized that with the 98-cent earnings, where the S&P 500 is 27.24. PE growth is 0.21. The leverage ratios look good, with the debt ratio at 0.11, debt to equity at 0.27, and interest coverage almost 24 times. Lots of short-term liquidity. The current ratio, 1.07, quick ratio at 0.87, and cash at 0.48. Looking good. The return on assets was 7.9%, and the return on equity was 19.3%, giving us an equity multiplier of 2.45. Return on capital employed was 4%, and return on invested capital 3.8%. Cash flows show operating cash flow almost $19 billion. Investing outflows were nearly 18 billion. Financing outflows were 1.2 billion, with free cash flow to the firm at a solid $73 billion. Amazon isn't paying a dividend yet. The enterprise value of Amazon is 1.8 trillion. That is 3.2 times revenue, annualizing this quarter's revenue. 6.5 times EBITDA, again annualized, and 25 times free cash flow. Guidance for Q2 2024 was published in their press release, saying that sales are expected to be 144 to 149 billion, or around 7 to 11% growth compared with Q2 2023. They noted that the leap year day added an additional 120 basis point of net revenue, or close to $2 billion. Operating income is expected to be 10 to 14 billion compared with 7.7 billion in the second quarter of 2023. Key takeaways from this report on the pro side. We like the gross margins at 49.5%. It's the highest it's been in a long time. We're expecting gross margins to continue to improve as Amazon moves into expanding its other businesses outside of online retail. We like the segment growth as each diverse business line continues to expand. 73 billion in free cash flow. Who can't like that? The enterprise value valuations would indicate that Amazon is not overvalued. Amazon has yet to pay a dividend, though that may change with Meta opening the gates. On the con side, we think the PE ratio is too high and would look for an opportunity to buy on a dip, though a premium company commands a premium price. The leap year overstated revenue for this quarter, which could possibly make next quarter's revenue look particularly weak. Share price, Amazon broke out to an all-time high on April the 11th of $189.77, surpassing its pandemic high. We're aware of chasing stocks. If Amazon dipped below 160, we would be looking to enter into a position. That being said, we're giving Amazon a neutral to buy rating. Amazon has great future prospects, but are cautious as the stock is trading at all-time highs. Like and subscribe.